Now we want to look at two concepts. The first one is tax base and the second one is carrying value. So what you can write as tax base in your notes, please write down. Tax base is the value of asset or liability, value of asset or liability as per the taxation books. Tax base is the value of asset or liability as per the taxation books, and carrying value is the value of asset or liability. Carrying value is the value of asset or liability as per the accounting books. Now looking at the values of tax book and accounting book can give us some insights about what's happening with the company on deferred tax asset or liability front. Okay, let's do an example to understand this. Let us say again we have an asset of 100,000. In tax books we are allowed to charge depreciation at the rate of 25%. In accounts book we are allowed to charge depreciation at the rate of 20%. First year sales of 100,000 minus depreciation of 25,000, profit of 75,000. Here in the accounts book I am assuming sales of again 100,000, but depreciation here would be how much? 20,000, and therefore profit before tax here would be 80,000. Let us assume a tax rate, so this is the value of asset. Let us assume a tax rate of 50%. So the amount of tax here would be how much? 37,500, and the amount of tax here would be how much? 40,000. Now which one of these two are we actually going to pay? The tax books, which is how much? 37,500. But your accounts book are asking you to pay 40, you are paying 37,500. Are we paying more or less? Less. And if you're paying less, it has to be a deferred tax liability. So we have a deferred tax liability of how much? 2,500. Up to this we are fine. Now there is a direct shortcut to get that amount of deferred tax asset or liability. How do we get that? We can find out what is the tax base of the asset. Tax base means the value of asset after deducting the depreciation as per taxation book. So asset was 1 lakh, we charge depreciation of 25,000, so tax base is 75,000. Are you following this? 1 lakh minus depreciation 25,000, so tax base 75,000. Carrying value, value of asset was 1 lakh minus depreciation we have charged is of 20,000, so carrying value is of 80,000. Up to this we are fine. Now you can take the difference between tax base and carrying value. Difference between tax base and carrying value is how much? Carrying value minus tax base. So this difference is 5,000. This you multiply with the tax rate. Okay, so which would be 50%, and it will directly tell you what is the amount of deferred tax asset or liability. Is that okay? So please write down this part.